Welcome to another episode, a bonus episode of the Advisor of Tomorrow podcast. I'm joined by my friend Isaiah Douglas. If you follow All About Your Benjamins, you know Isaiah. He's been, I think he's the most guest. How would I say that? The guest who's been on the most on Talking Shop. We've done a podcast together, I believe, as well. So he's been there a lot. He's just up the street from me. So I wanted to have Isaiah come on, and this is going to be a little bit different than a traditional podcast. It's not going to be an interview. Isaiah's not coming on to educate us on Bitcoin per se about what it is, but it's going to be more of a conversation of two friends that are advisors that see the future of cryptocurrencies and particularly Bitcoin, kind of talking through the opportunities we see ahead, maybe why advisors should be thinking about it, how they could be thinking about it, just having a conversation. So I do think listeners, you're going to learn something about Bitcoin, but we're not going to go back and walk you through how it got started, what it is. I'll link to an old blog post on All About Your Benjamins in the show notes that was my deep dive in the rabbit hole like 2 years ago. That'll have some good information on there. The Satoshi white paper will be there, but really just going to be a conversation. So as I continue to ramble, let's bring Isaiah in real quick. And Isaiah, before we get to Bitcoin, real quick, congratulations on the merger. Why don't you share your big news with everybody and let them know what you just did?
Yeah, thank you, Justin. Great to come back and be able to chat and talk about something that I'm super passionate about. And I do think Bitcoin is the story of the 2020s, and we'll get into that. But yeah, real quick. So we're in September 2020. Last month, I was fortunate enough to find someone that I really wanted to partner with. And that was one of my big strategic visions for 2020. And I merged with Josh Bennett. And so I am a partner in Vincere Wealth Management now, which is super exciting. We kept and retained Josh's name because the ID, financial planning and wealth management, was a mouthful and not overly creative. So I was happy to kind of let that go by the wayside and have a much more easy to say, like, meaning behind it name and something that we can build and grow. And that is definitely the vision for the future, is to, have a place for advisors to start into the industry and really grow and not have to go out and take a sales role or do something that they hated doing. And like, hopefully they stick around and want to stay in the industry, but also for other advisors that have maybe always been at a firm and they feel like they can't be appreciated, like they can grow and scale and do some cool things, and we can help with that. And yeah, so Josh and I are super excited. I think there'll be a lot more to see on that. Again, I feel very blessed and fortunate to have a partner that is a heck of a lot smarter than me, that makes me better at what I do. So yeah, life is good.
Well, we were talking about this offline, but I'll have you back on and maybe have you and Josh come join for a live podcast, and we can talk about partnerships and how you guys came to that, what was good, what was bad, what'd you learn, and kind of, because I think that's going to be something we're going to see in our profession, not just from older advisors to younger advisors, but I think we're going to see a lot of the younger advisors that got started getting to a point where it makes sense to find like-minded people and come together and do something like the two of you are doing. So that'll be a conversation for another day, but let's get into Bitcoin, because that's why everybody's tuning in. I've been following crypto and Bitcoin since 2017 is when it went wild. So like that spring, I started to look into it, and then I lucked out, put a little bit in, and had some good success, and have been following it all along. Tyrone Ross is a very good friend of mine, and we all know his passion for it. So he keeps me up to date, but continuing to read and see what's going on. And I noticed over the last couple of months, all of a sudden, some barking coming from you about Bitcoin. You had that great great blog post about the founding fathers and how they would love Bitcoin. I'll link to that as well. What brought you to the path of researching, following crypto, and what put it on your radar? And then we'll get to like what made you, this is a huge statement. Story of 2020. We're talking COVID, election year, and you got Bitcoin as the story of 2020. So what led you down that path?
Yeah, I guess I should have said 2020. So like, I think in this decade, but it still could.
Gotcha.
Yeah, I think COVID will probably dominate 2020 itself. But yeah, I think, the decade of the 2020s, that I should have clarified that. But similar to you, like 2017 when it was going wild, I was actually at Merrill Lynch on a team at the time, and we were having clients like say, hey, what do you think about this Bitcoin thing? And again, I had no clue. I'd never read the white paper, never really did any research into it. And the marching orders from Bank of America were it's tulips, it's fake money, it's, used for scams and drug laundering and all nefarious activities, all this other garbage. And that was kind of the company line that you towed. And then when it crashed, it was like, see, told you so. Like, this is not going to hold any value. It's not worth anything. So I got more interested after I left Merrill. And once the price kind of settled down and really wasn't, front page news. Everyone was talking about it. You didn't have Uber drivers saying, hey, Bitcoin or, Ethereum or like all these other kind of altcoins. That's when I started getting interested, because once it was out there, it was still surviving. It wasn't gone. I wanted to dig more into it. So I read Crypto Assets was the first initial book. And I think that was a recommendation by a couple different people. And I just saw, I think on Twitter initially, it's Jack Tarter and Chris Berinsky. I think it's the name. And that was a great book, and it kind of opened my eyes. Now they talk about everything kind of in that. It's supposed to be kind of the like behavioral investor, or not behavioral investor. Shout out to Daniel Crosby. I love that book, but it's kind of supposed to be like the valuation, like the Ben Graham, evergreen book around investing into crypto assets. The book that really changed it for me was reading Bitcoin Standard. And that was the book by, and I always mess up his name, but the Bitcoin Standard, that was the book that really opened my eyes. I read that right around the time of when everything started hitting the fan in early 2020. So I started reading it early 2020, then everything happened with COVID and kicked off, and then the money printing started. And it was just like, wow, once you start seeing what's going on in kind of the history of what is money, I think that's when you start seeing why Bitcoin matters. And it's fascinating to me when you start seeing some of the stats that in the US, we basically printed more money in June of 2020 than the first 2 centuries after the founding of the United States. And that makes you start to question things. They can just start pulling money out of the air. Like, why do people pay taxes? Like when I have to write a check for my quarterly taxes, I'm like, well, this is like, why do I need to do that? And this isn't tinfoil hatty. It's just like, let's start like truly understand what is money. Like, what is money supposed to be? What does it do? And what's the purpose of it? Because money's had different forms over the course of time. And that was kind of what got me interested.
Yeah, I'll link to the Bitcoin Standard. No wonder you couldn't say it. I can't pronounce the name.
Safest Dean. I cannot. Yeah, I can't. Say
I mean, that's how you would say it. Amos maybe is his last name, but I'll link to it. I've got Crypto Assets. That Crypto Assets was really the book that's when the light bulb went off, because not only did they talk about the different types of coins, but what really sold it for me was the use cases they talked about. And the use cases, the one that always stands out in my mind is they talk about a story of a woman who lived in Toronto that had to walk to send money through Western Union to her family back somewhere else. And like by the time she was all said and done, it took hours to do. It was super expensive. And in the costs that she paid to send it, that dollar amount, whatever it was, would have bought like 2 weeks worth of food for her family back home. So her family essentially lost 2 weeks of food just to transact money, where if she had a digital wallet, she could send it to them for next to nothing, and they'd have it right away. And like that was where I could start to see where this is a bigger thing than just, digital currency that seems real cool. I mean, I remember hearing like the time we hear back when people bought the pizza with the Bitcoin that would be worth like millions of dollars today. I remember hearing about it. I had a friend of mine ask me about it, and I knew nothing about it. I was like, look, dude, I've never even heard of it. I know nothing about it. And then like it would slowly start to come up. And I don't remember what was the tipping point that made me actually get more interested in it. But I definitely see the opportunity and the use cases for it. And every once in a while, just because it is so different, if you will. I mean, maybe it's not that different, but it is different. It's not what we grew up with. It's not what we know. It still is kind of magical in a sense that there's nothing to see, and it's all numbers and coding, which if we think about our dollar anyways, it's all numbers. Like you think about the transactions that go on, it's all back and forth numbers and computers. There's not actually money exchanging hands. But for some reason in my mind, it still seems different. That keeps me to be a little bit more, not skeptical, because I'm not skeptical, but a little bit more conservative with it. So I'll link to those books. So, okay, that got you into reading more about it and believing in it. At what point did you start thinking about, I need to start really considering that this needs to be a part of my clients' portfolios, or maybe not a part of my clients' portfolios, but I need to be having conversations with my clients, exposing them to this asset class, and in the long run, figuring out how do I work this in as a diversifier?
Yeah, I think it goes back to it, and we talked about it in a video I think we did and put on YouTube about just like how do advisors invest their own money, or how do they think about it. So for me, once the light bulb went off in my mind and kind of the scales fell from my eyes, you start seeing this for what it is. And I think everyone has that kind of aha moment. That's when I started having conversations. And I think after people maybe chuckle a little bit, they have a lot of questions. It's wild. I have a client that's 69 that had a lot of questions around Bitcoin, and people are like, oh, it's only for millennials. That's totally not true.
Mm-hmm.
And there's plenty of people that want to know about it, and they will kind of chuckle, and it's kind of a thing that's there, but they want to know more. And I think if we don't bring it up as advisors, when clients bring it up, they've probably already done something that's not smart. Maybe they're going and doing something and they're just buying it and leaving it on Coinbase, let's say. Again, not to get into like views on specific custodians or partners or where you can put money and stuff like that, but like there are better ways to own it. And that to me is like, I wanted to understand it better for myself. And that's kind of what led me down the path. And the more that I do more research, the more that I become more and more adamant that this will be part of what's going to be in portfolios in the future. And I want to make it clear. And I love Tyrone just as much as probably everyone listening. And he talks about a lot of the other areas of crypto. To me, advisors, it is Bitcoin, and that's it. There's nothing else that you need to focus on. Don't worry about all the other altcoins. Don't worry about them. You don't need to worry about them. At some point in the future, maybe. Not today. It doesn't matter. Don't worry about those. Focus on Bitcoin and learn that, and that's it.
I agree. I don't know if I'm quite to the point where I want to bring it up in conversation with clients. Maybe write some more about it and put it in front of them from that standpoint. But I definitely think as an advisor, you need to be able to talk intelligently about it. And that was why I started to, once I saw that more people were asking about it, that was what initially led me to figure it out. And then I started really enjoying it and want to learn more about it. But I want to be able to answer questions and say, this is what it is. This is how it works. Here's different ways. Here's things to think of. I may not advise you on what coin to invest in or whether or not you should, but I look at it as I'm okay with clients wanting to buy some shares of Apple or Amazon or whatever it might be, in an amount that's not going to blow up their portfolio. So I wanted to be in a position to say, okay, if you really believe in this, asset class and the technology behind it, and you want to have exposure to it, let's figure out how much you can afford to put in it that doesn't blow up your financial plan in case it goes to zero, just like I would with a blue chip stock or something major, and then go have at it. And then that way we know your plan's in good shape. You're participating in something that you believe in. And I was able to intelligently talk to you and educate you on the risks and the rewards and all of those things and what's the best way to do it, and make sure you take it off and put it on cold storage and educate you without, doing too much and putting myself, because we have to think about as advisors, what's our risk in all of this and advising in a newer asset class that, it could blow up and stocks can blow up, ETFs could blow up. All the stuff could blow up, but it's got a long enough history that I think that it's a little bit less scary. Or something that's new that most of us don't really understand at all. To say that we're going to advise on that, not knowing if it's going to be around in 10 years or not, is a little bit more. I think advisors are thinking CYA when it comes to this stuff.
100%. 100%.
So I want to loop back. Sorry, go ahead, and I'll go back to it.
I was just going to say 100%. I think the CYA piece of it is absolutely more reason why, but there's just a lack of education from advisors to understand what Bitcoin is. And again, I'm not trying to say things that are, outlandish, but I think there's more risk for the next 10 years to hold cash than there is to hold Bitcoin. If you want to protect your purchasing power, why, if you hold cash in the bank, is it going to lose its purchasing power over time? Mm-hmm. Where if you own and understand the theory behind Bitcoin, it actually enables and incentivizes saving versus consumption. Mm-hmm. The US dollar of being inflated away and losing its purchasing power, you have to consume or invest it or put it at risk. With something like Bitcoin, you can have that store of value. And I know people will be like, well, it drops from 10,000 to 5,000 and all. But when you think about it and you look at what Bitcoin is doing, it is going to protect your purchasing power more than what the US dollar is. If you go back in time, and Dan Held on Twitter, who I think he works for Kraken, which is a crypto exchange, he shared, monopoly money from way back in the 20s or 30s has held its value better than the US dollar. And people joke about monopoly money. And so there's a good chart, and I share that in my post about the founding fathers. And the founding fathers, you think about Bitcoin, it is all about freedom and being able to take back control of your money versus having somebody else dictate what happens to the money, which is what the Federal Reserve has been doing, is dictating, we believe that we need more money, we believe this or that, and they devalue what you've saved. And it just isn't helpful for people to put money and say, where can I store money safely? I get questions all the time. What should I do with this extra cash? I have this money saved. And they don't want to necessarily take risks. Now, again, I'm not saying go put it all in Bitcoin. Right. That's not what I'm saying. But I think that's part of the use case as we see this with, negative interest rates and all these different things around the world, like financial system is really struggling.
And
And again,
I think maybe the term safety needs to be redefined or clarified. Does safety mean $1 on paper shows still as $1? Like when I pull my statement up, if I have $1,000 next month, I have $1,000 because it's safe. It doesn't fluctuate, not taking into consideration the purchasing power loss. Or does safety mean it's going to fluctuate, but over the long term, it's going to keep up with inflation? I think another reason it's easy for people to accept that your dollar is going to be worth less today than it is a year from now and 10 years from now is just we've always known inflation, and that's just accepted. We know that inflation happens. We know $1 today is not $1 tomorrow, and it's just ingrained, and we accept it. And there's really hasn't been, other than investing in equities, a way to combat that. So I just think we've been conditioned for so long to take the safe route. It's going to be worth less, but if you save and invest on the other side, you should be okay.
Yeah, and I'd say we've been conditioned that way. And again, this is part of, I think, the Bitcoin story and the rabbit hole that you go down to is you kind of learn more about monetary policy and like what's happening in the United States. And if you go back and you go to the website, we can link to it, which is, WTF, like 1971, when we went off the gold standard. That's when a lot of this stuff happened, as far as seeing, money get inflated away and not being on something that is sound or backed by gold. I mean, today money's not backed by anything. And that's where I always laugh when people say, well, Bitcoin's just internet money. It has nothing backing behind it. Well, today it's the full faith of the US government. So depending on your thoughts there, I mean, what is it really truly backing? And we're fortunate enough, being in the United States, that we have had fairly stable currency. We haven't seen some fluctuations. And I think when people look at Bitcoin, they think of just their life in the United States, but Bitcoin has a lot of use cases around the world. Look at people in Venezuela. You look at people, in, Turkey and other places around the world that are using it to protect their savings. And it is a benefit for them. But the best definition, I know that we're not necessarily going back to definitions, but Lynn Alden, who I think is a fantastic follow on Twitter and a lot of really good insight when you look at macro, she talked about Bitcoin, and she's come at it from a traditional finance perspective, but it's scarce, durable, portable, divisible, verifiable, storable, fungible, saleable, and recognized across borders. So therefore it has the properties of money. Let that sink in. Bitcoin is money the same way that the US dollar is money. And the reason I was so excited to have this conversation is I'm not trying to convince someone that they need to put Bitcoin into clients' accounts or put, any personal money. They just need to start educating themselves. It'll do the rest. I have 100% conviction that if you really put time and effort into it and truly come at it and read about it, you'll see that there's some legitimacy behind it. And it's okay if you don't see it, because your clients will drag you by the end of this decade into knowing more about Bitcoin. You won't have an excuse. You will not have an excuse.
I'm going to take the other side of that argument, not because I don't agree with you, but I think, the reason I don't think that, I think that there will be plenty of people who will continue to deny what they might find out about it. Like if we look at current times and what's going on from a social standpoint, like there are people denying that racism is a problem in the US. The people who are denying that there's a case for Bitcoin that could actually be viable will continue to deny that. And they will drag their, they'll go to their grave fighting that. So maybe it is, as more time goes on and those people are no longer here, as bad as that sounds, that maybe gets more of a use case. But I think that some people will be so entrenched in what they've always believed in that they're not gonna change. Now, what could happen is their clients leave them to find the advisors that do understand it and do incorporate it and do believe in it. And I just think it's a fascinating conversation, because like so many times in my life, I'm the type of person who's more of a mediator. I'm not really a debater. I see both sides of arguments in a lot of things. Not everything. There's some things I'll stay in my ground, but a lot of times I'm able to see both sides. I see both sides of this. I see the Bitcoin story. I see the potential. I see it being here for the long term. And I would say I tilt more that way, but I still have a little bit of maybe not. Like maybe this is something that in 10 years we look back at and laugh that, oh, I can't believe we thought that was going to be real. Deep down, I don't think that's it, but there's still a little bit of that in me. And I don't know why, because I've done my research. I've looked into it. I think part of it is, where does the research we're doing come from? What's the motivations behind it? And how do I know that this is right? And then also, just because something in theory sounds like it should make sense doesn't always mean that it plays out that way. I think, I mean, I don't know how government comes in and changes all of this, but will the governments across the world let a digital currency like Bitcoin take over like that? Like, will the U.S. government try to do something that will stop its growth and use case? And I don't know. Or can they? Like, those are the things that I mean, I know I read that they can't because it's run by, you know, the blockchain and they can't have access to it, but the government could do whatever the hell they want. They could come up with like some ways to say you can't transact using Bitcoin. Surely they can put some things in place that make the use case of it, at least in the US, harder. I don't know. Or so those are the things that kind of keep me going. And I know we're rambling.
No.
This is what I want. I want a conversation between two of us and just we're talking our way through this stuff.
I think that's where a lot of advisors are going to come at it from. And I want to back up because I think the point that you just made, I don't know if anyone listens to Macro Voices with Eric Townsend, but he's talked a lot about why he's not a believer in Bitcoin for some of the different things that you spoke about, is that eventually the US government is going to find a way to have, he used to think FedCoin, now he thinks it's going to come from Silicon Valley, but they're going to have digital currency that they can control and then make certain things happen in the US, and they're going to do away with cash or other things where they can then track and trace more of the spending. Now, again, that gets down another little rabbit hole of like, how much control is the government going to have? But to answer the question, like, can the government take it away and ban it? Let's think about that. So this is what would happen. There's going to be other countries around the world because the US is the dominant currency of the world. So 45% of transactions around the world happen in US dollars. We are the reserve currency of the world. There are plenty of countries that want that to change. Mm-hmm. Russia, China being some of them, and they're working on their own things.
China.
But if you think about it, it's going to be attraction of talent. If the United States says, hey, there's no Bitcoin, there's going to be nations that stand up and say, you know what, if you're an entrepreneur and you believe in Bitcoin and you're worth, you know, X amount of dollars and you're going to come bring jobs and infrastructure here, like come build your new country here. And that absolutely will happen. And you'll see that there's going to be countries as a reserve asset that are going to hold Bitcoin. And we'll talk about MicroStrategies here in a second, which was the first publicly traded company. Michael Saylor, the CEO, put $250 million of their assets, of their cash into Bitcoin, and made a huge case for a public company to do that. Is wild. And there's going to be others that follow suit. So this is not going away. The other interesting thing, in July, there's a ruling from the Office of the Comptroller of Currency, or OCC, a branch of the Treasury, supervises the national banks, institutions in the United States, issued an interpretive letter outlining how U.S. banks can now interact with crypto assets going forward. The letter, addressed to an unnamed bank, so remember, unnamed, we'll find out eventually, is allowing them to embrace the crypto industry by permitting banks to both custody crypto assets for customers and provide banking services for crypto-oriented businesses. This is massive and this is huge. And anyone that thinks that this stuff would get passed and then the government's going to ban it, you're not paying attention to what's going on. The other thing, Paul Tudor Jones, people know that name. 2% of his fund is in Bitcoin. So you have, as an advisor, you have cover. You can now talk about Bitcoin because there are really bright, intelligent people. The U.S. government, the branch of the Treasury, is saying, hey, banks, you can hold this. A publicly traded company has put it as a reserve asset because they said cash pretty much is trash and going to lose its purchasing power, and that businesses were too expensive for them to go out and buy another business. So they're just going to hold on to that Bitcoin. And then once the environment for acquisitions is better, they're going to have a heck of a lot of money to go out and make some really good acquisitions. I'm excited to watch that company and that story. It's a brilliant move by him. And then Paul Tudor Jones. And there's plenty of other firms that are starting to put Bitcoin as an asset on their balance sheet. And you'll see this and you'll continue to see it. So it's not going away. It's not going to get banned. And if it does, the talent will go to where Bitcoin is allowed.
I remember when Jamie Dimon came out and spoke negatively about Bitcoin, and like 3 or 4 months later, I don't remember what it was that Chase did, but like Chase was doing something in the world of blockchain and Bitcoin. Like it wasn't that much longer after he had said negative things about it. I want to go back. And so what you said as an advisor, Bitcoin, and then don't worry about anything else. Why do you say Bitcoin and not worrying about the other shit coins, as they like to call them?
Yeah, absolutely. Yeah, they are. I mean, they are garbage. Like, it's cool that they can do some interesting things, but I don't think there's a use case. I think Bitcoin has a use case, and I've talked with Tyrone about this. His is it's peer-to-peer cash, and that was kind of the way the Bitcoin white paper by Satoshi, when he wrote it, that was kind of the way it looked to me. The way that I've explained it, the way that I look at it, is it's digital gold. So this is a place where you can store wealth. It will grow. It is not going to be inflated away. So naturally, for those that understand Bitcoin, again, not going back into what exactly it is, but as there's less and less Bitcoin coming onto the market, the only way for there to be value creation is for the number to go up. So if you see people say, you know, number go up with Bitcoin, the structure behind the entity itself, it will have to go up in value over time. It's just the way that it will work. As more people come on board and want to own it, you can't create more. There's only 21 million. So for me, it's a store of value. And that's the use case that I look at it as. And from an advisor perspective, if you understand, and you don't have to be a CFA, but portfolio construction, I think that there's a really compelling case there. And I had someone on Twitter tell me, like, why would I own anything other than stocks and bonds? And after kind of saying, are you serious? I came back and, like, the wealth management industry has been built on the 60-40 portfolio. And there's some really good research showing that, you know, if you look at 90 years of return, 22 years have accounted for 90% of the returns of the 60-40 portfolio. That's from 1984 to 2007, which has been recent history. So most people have only seen the 60-40 portfolio do really well. That will change at some point. It will not go on forever. But if you look at just a 60-40 portfolio, which is kind of the industry baseline, and you add 1% of Bitcoin to a portfolio, and Bitwise did the study, there's a great paper out there, it adds annualized return of almost 1%. You add 2.5% of Bitcoin, it's going to almost double. And this is not adding a bunch more volatility. This is not adding a bunch more of a max drawdown. 60-40 traditional portfolio from 2014 to 2020, you know, max drawdown is 21. If you just do the traditional, it's like 22, 23% max drawdown if you go up to 5% Bitcoin. And that's rebalanced quarterly. All that being said, a small allocation goes a long way. If we are in a muted return environment, which I believe we are, and you can say whatever you want to say, long-term returns, just buy and hold, whatever your thoughts are, not getting into that. But if you just own 1% of Bitcoin, that's all that I've advocated for a lot of clients, is like just 1 or 2% goes a long way. And it's amazing to me, the feedback from most advisors is, that's ridiculous. No 60-year-old business owner needs a 1% piece of Bitcoin. That who would ever do that? Why not? A 60-year-old business owner is still going to be around for what, 30, 35 years probably? Is that not valuable to them?
Right.
Like, what can they do with that? Do you even know their goals? Like, I can put a 1% allocation. That is the best risk return, bar none, of anything you can put your money in today, outside of maybe your business. Mm-hmm. So I just don't understand why there's so much pushback from the advisor community when you truly understand what Bitcoin is. It's never been hacked. 99.99999% uptime. Mm-hmm. You store value there. You can custody yourself. And again, we can get into some of those different things, but you can be your own bank, hold it, and it will do well. Like, I don't see the pushback. I guess the pushback is probably, I can't charge AUM on it. And that's what I want. Then that's what I want to get to. And I think that is complete bullshit.
I hate that excuse, because I know multiple reasons. I know plenty of advisors that their clients have a lot of cash at the bank. That's part of the recommendation because that's what they need. They're not charging a fee on that. I have clients who have investments elsewhere that there's no justification for moving them. I don't charge a fee on it because that's what's best for them. 1% of a portfolio in Bitcoin is not that much revenue. And if you need to assess a 1%, a fee on 1% of your client's portfolio, then you're in trouble. I hate that argument. I don't believe it. I don't think that's why, but I think maybe for some advisors, that's why there are, but those are the ones that are crummy anyways. I think it's more of the unknown and the fear of it that is really the reasons why. I don't buy into that we can't put a fee on it, because again, 1% in this is not hurting your bottom line. You will be okay. And if you're rebalancing properly and that Bitcoin grows, then you take some of that growth, you put it into your portfolio, charging a fee on, and your revenues go up. So I hate that excuse. I think that's a cop-out. I don't think that that's really the reason that advisors don't. I want to take a education break for 1 second. Excuse me. I do think it makes sense for anybody who doesn't know much about Bitcoin. I don't want to go big education, but you mentioned it is by design going to go up keep up with inflation, because there's only 21 million coins that will ever exist. I don't know what the loss count is nowadays, but at one point it was like 7 million of them are lost. So now we're down to like 14 million that'll ever be out there. But explain how by design real quick, by only having 21 million, you can't issue any more, how that price is supposed to go up. And I think it requires a little bit of an explanation about the mining and like the incentive for the miners, and that's why the prices go up. But like real quick, high level, just for anybody who doesn't know, explain that real quick.
Yeah. So there's 4-year cycles, right? So with Bitcoin, miners are solving the equation. So every 10 minutes, there's a new block to the blockchain of the transactions that happen. So it's that that happens. And then the reward for those miners to solve that is in Bitcoin. And so when you hear about these halving cycles, it's when the money supply is lessened. So it's the exact opposite of what's happening with the US dollar, where they're printing more. Bitcoin over time, every 4 years, is less and less. So if you look at a chart of like the USD consumption is like parabolic going up this way, where if you look at Bitcoin, a lot of it has already been mined. So much of the Bitcoin that are ever going to be created are already out in existence, and it's slowly going to be less and less. So that is where the value of holding those over time, because they won't be more, once more value. So as other currencies come into Bitcoin, and today Bitcoin is the 21st currency in the world as far as value. Justin, I want to ask you, how many currencies do you think are out there in the world today?
100. I don't know.
There's 180 currencies.
Oh, I wasn't too far off.
And so if you think about it today, there can be more than one. I think this is the use case of other people in crypto talking about, well, there could be Bitcoin, there could be others. How do you know there won't be some other currency? And that's where, again, not to get off the education piece, I'll come back to the network effect. Let's talk about the network effect. But if you go back to the miners, so their reward for doing the work at solving the equation becomes less and less over time. So they need to have the value be there to be compensated for the electricity and the consumption of it. The other cool thing, and the pushback I hear a lot of from people is, well, Bitcoin's going to take up so much energy, and it's going to be this it's going to be damaging to the environment. Bitcoin's bad for the environment because of the energy consumption. Well, Bitcoin incentivizes cheap energy, so it looks at renewables. And there's so many things about it once you start digging into Bitcoin that it's amazing what it solves. You've probably seen on Twitter, if you see the crazy crypto people that talk about Bitcoin solves this. That is amazing. I thought it was like, these people are nuts. But when you start digging in more, Bitcoin solves this is the answer for a lot of stuff. We talk about, inequality. We talk about different things. The biggest wealth transfer in the world is going to happen as more people put money into Bitcoin, because I don't care if you're worth $100 million, but if you have zero Bitcoin, at some point in the future, that's really going to be difficult for you to retain the same purchasing power, because when Bitcoin becomes the reserve asset, or one of the reserve assets that are out there, people that have put small amounts of money into Bitcoin are going to have a lot of purchasing power to make decisions. And I think that's going to be really interesting to play out over time. And I'm not saying that's happening in the next 10 years, just to be clear. Like, this is going to be a long-term cycle, which is why I'm so excited to see what happens with it. But I'll pause there. We can come back to network effect and kind of currencies and all that stuff here in a second if you want. But yeah, let me know.
No, I thought that was the edge. I mean, I would assume somebody tuning in knows a little bit about Bitcoin, but just in case there's somebody that this is their first exposure, they're an advisor, they're like, okay, I really need to learn about it, and this happened to hit them at the right time. Just wanted to give them a little bit. Again, there's going to be resources in the show notes, the books that we've mentioned, the white paper. I had that Bitwise piece about the 1%, 2% allocations. I put that in the Advisor of Tomorrow newsletter a couple weeks ago. Go sign up for that if you want to keep up to date with everything going on for the future of our profession. But I'll put all that in there so you can have access to that as we've mentioned it. So we can go ahead and go to the network effect. I want to make sure that we also kind of talk about like how, as advisors, okay, we've done our research, we buy into it, we see the longevity of it, we are okay with the 1%, 2% allocation and the benefits of that. At this point, how do we do it? And I'm going to also, for Tyrone, I'm going to ask you, do we need a Bitcoin ETF? So we'll do that a little bit later on. Go to the network effect, and let's get more into kind of some practitioner things of ways that this could work as we wait for better ways to have access to this for our clients.
Yeah, and I think it's important to like the how. I just think there's so much bad lack of education of advisors not understanding. That's why I think that's where I'm going about and thinking of making sure people understand it. But yeah, when you think about the network effect, why will Bitcoin be the winner when there's so many others, right? There have been attempts to adjust Bitcoin where there's the forks or changes. They haven't worked. So Bitcoin Cash tried to do that and change the structure in 2017. It didn't work. So I see the pushback of, well, how do you know that Bitcoin won't be the MySpace and some other Facebook's going to come up and that's going to be where all the value goes? Mm-hmm. Bitcoin is 60% of the crypto market cap today. And it's the same reason why Google, Amazon, and Facebook are so dominant. Network effects. People all believe that it has value. The incentive structure within Bitcoin incentivizes those that own it to make sure that it continues to grow. And so it's the same structure of why Google and Amazon and Facebook become more and more powerful over time. It's because the network of all the people and the information that they have. And it's not always that the best technology wins. And I'm not saying that Bitcoin has better technology than Ethereum. That's not, I mean, it's not, that has no bearing on it. It's all about the perceived benefit to the users. And there, like I said, 180 different currencies. We maybe talk about 4 or 5. You hear about USD, Euro, Japanese yen, and then there's a handful of others, right? But there's kind of 4 or 5 major ones. I do believe that Bitcoin will be one of those. And there's been some people that I respect a lot that have talked about it being a collateral asset. I don't know if Bitcoin is going to be the, hey, I pay $5 for my latte in the morning and I use Bitcoin. I don't necessarily think that'll be the case. I think it'll be something that is perhaps the settlement asset for big, large financial institutions, similar to kind of what gold reserves were historically in the past. So I'm not saying that this is going to be what we use day in and day out to transact. I know that Tyrone may disagree with me, and there's others. I think we may use it for a little bit like that, but I don't think long-term that's where it's going to go, because again, there's only 21 million. So if you start thinking about that, how many people are out there to own one Bitcoin? That's going to be really rare and scarce. And I think there'll be other things where Bitcoin will back other pieces. So it will grow and evolve. That's why I'm saying today, if you're an advisor and you're a fiduciary and you understand the concepts of what it will be and how it will grow, the best risk return for anyone, bar none, is Bitcoin. A 1 or 2% allocation, like you said, is not going to blow up their portfolio, but the benefits, the potential benefits of what it could do is astronomical. Astronomical.
See, I'm just waiting to get a little bit more time in that data set. So you're to your point, 60-40 is 50 years or whatever you said it was, but the Bitcoin allocation 1-2% is only, how far did they go back with that? Do you remember? I mean, it can't be that long.
The 1 and 2% allocation,
Yeah.
it's back to 2014.
Okay, so we're looking at 6 years. In that 6 years, it gave us benefits, but we know past performance doesn't dictate future. So we'll have to wait and see. I would feel a little bit more comfortable personally recommending it and building into client portfolios with a little bit more data. Now, I do feel comfortable that it made it through 2008. I do feel comfortable that it made it through this year's chaos. It's been through its ups and downs. So, as advisors early in our career, we get questioned about, what experience do you have? And it's paid its dues. It's weathered some major storms. It didn't go away. It held up fine and did well. So I think that with more of a track record, even though we're advisors aren't supposed to rely on that past performance, I think with more track record, it'll help it as well. Like most advisors are not going to go stick money in a brand new ETF strategy, even if the backdated looks real good, because they want to see, is it going to do what it says it's going to do? Is it going to be liquid? Is it going to stick around? I think with more time, it'll be there. I also think if some type of accessible vehicle that's not trading at a 200% premium or whatever the current option is, then it may allow them to have access to it sooner. So I'll jump right to it. What are your thoughts on a Bitcoin ETF? Do we need that?
We don't need it.
And I would agree. So I'm in the camp also. Sorry, you're my guest. Go ahead.
No, you're
We're
totally
friends,
fine.
though. I can interrupt my friend.
Yeah. Real quick though, just to talk about the history of it, I think that's important. And it was born out of the Great Financial Crisis, so it didn't go through everything. It was kind of born and developed through that. So the white paper was released right at the tail end.
Right.
And just for clarification purposes there, and there's no need for an ETF. There's zero. So the whole idea and the whole theory behind Bitcoin is similar. And again, I think this is where advisors have issues, especially if they don't believe in gold at all. And that's a whole nother side tangent. But gold bugs, part of the reason why they like it is it can be outside of the financial system. When you have an ETF and you start financializing this asset, it becomes less and less, I think, impactful for what it can do. Where if you actually hold the underlying asset, no one can take that away from you. If you hold your Bitcoin in a hardware wallet, and I would encourage you to have multi-signature on that, and I would tell you the best option from my perspective, and the people I think do an awesome job, great user, slick interface, is CASA, C-A-S-A. I think they've done a fantastic job at education around what's important. Unchained is another one with multi-sig, but you can have a hardware wallet and you can have multiple signatures. So it's like 2 keys to unlock it before it moves. So you can have a key in, Fishers, Indiana, and a key in Los Angeles, California, and that money can't move, or that Bitcoin can't move without 2 people agreeing and signing. So it's pretty cool, some of the things you can structure with that. And I don't think an ETF is the sole answer. I think people just need to understand that this is going to be different. I think there will be an ETF, and I do think a lot of people will love it all of a sudden. And now Bitcoin's great because it's a good diversifier, and people will add to it because it's an ETF. There'll be one eventually. It's just going to take some time. I don't think we need it though.
I fall back to Tyrone's big beef with it. It's an expensive way to access it. Like, why pay a wrapper on a Bitcoin when you can go out to get it? Now, granted, now it allows, so for the advisor that's bitching over the 1% fee loss, now you can put it in your portfolio and charge a fee on it. But I don't recommend individual stocks. If I'm buying Bitcoin as a store of value, I don't think that it needs to be in the account, other than maybe tax deferral reasons. If we could ever get it into like qualified accounts,
you can. We can talk about that.
We can now. See, like, 'cause I'm learning stuff. Like, I'm not in it as deep as you are right now, but yeah. So
I mean, I
self-directed IRA.
Yeah, self-directed
Okay.
IRA. I mean, I have Bitcoin in my Roth IRA today.
Yeah. Okay. So I think that the ETF makes it easier for a lot of advisors, but I think that the answer is just hold it directly. I mean, I have clients, not because I recommended it, but they have gold. They have gold bars in their safes and, hidden elsewhere. But I just think that the access to it from an advisor standpoint is hard. And also from a standpoint of planning, like, okay, you've got your money in your wallet. I use Ledger. So while we're throwing out names of doing your research, I have a Ledger. I bought a Ledger for each of the boys as well, and just put a little bit into their accounts. It'd be kind of cool one day to hand them this Ledger with however much Bitcoin has grown to. The other thing that's nice about that versus an UGMA account is their name's not on it. Like, I know the keys and all of it. So I just, you want to act up? Let me take that Bitcoin back, and me and mom can retire a little bit earlier. But I just think that, like, I was telling Tyrone, I would love to have a way to API in the client's balance. Like, here's how much we have in Bitcoin, to make sure it is in the portfolio properly. And maybe there's a way to do it now that I don't know of, but I don't know of a way to get somebody's Bitcoin balance to show up in their portfolio, in our portfolio analysis. I mean, if they're not actively buying it, I guess we can just keep record, like in our CRM notes, client has, 1.27578 Bitcoin, and we can do the math. But it would be nice for it to pull in and just show, and maybe as there's more adoption of this being a part of portfolio construction, that finds its way into our tools.
Yeah, and I would say that, so there's a platform coming out, and again, it's still very early. I've had conversations with them. It's called Blockchain, but what they're trying to do is build something specifically for custodial efforts for RIAs. Mm-hmm. It's custodied at Gemini, so it's in cold storage at Gemini. So you're not going to actually have your ledger or Trezor that you would hold your own keys, which in the Bitcoin community, it's, if you don't, no keys, not your coins type of thing. So I think that that's important, but this could be a way for an RIA to have access to where they can't take the Bitcoin, right? It's held elsewhere, but they can do it on behalf of their client to make the investment, to make sure that they know where it's stored. They can rebalance. And if they want to get into other, altcoins, AKA shit coins, things that you don't need to own, they can, if they had a client that was interested. But this gives you the ability, and that stuff is coming online. Mm-hmm. And I've had conversations with others, whether it's multi-sig or other companies, they want to build stuff for advisors because they also know that there's a lot of wealth in the world that's managed, and financial advisors are like the key to that. And so that's why they're going to build all these tools for us. We have to be educated to talk with clients and understand the impact of it. And I still struggle with, people making comments like, well, I don't buy currencies in client portfolios. Well, do you hedge all of your international portfolios back to USD? Because if not, then you have currency exposure. So like, that's null and void. You can't use that excuse. And those cheeky little responses like that you make to clients, that's not going to work in 2030 when Bitcoin's worth a heck of a lot more than today. I'm not going to make price.
I'm not going to ask you a prediction. I don't want this to come back.
Yeah, I was going to say, I'd probably be too low even if I made a prediction. So like, that to me is one of the things, like, you're going to have to be educated on it, and you're going to have 6-year-old clients pushing you. So like, you need to get on board and educate yourself, or you're going to just be playing catch up. So that's why today, when you're not maybe getting as many questions, is good, because if history is any indication, the last time we went through a halving cycle, which the most recent halving was in May, that's when the big run up in 2017 happened. Likely will be something similar when you think about 2021, 2022. So that's my prediction, that you'll see a big spike in interest in those times. I'm not going to say the price is going to move, but I think you'll see a lot of interest but the interest is typically tied to price.
So from an advisor standpoint, what's a good way, or how would you recommend advisors introducing the conversation with clients, bringing it to their attention, talking to them about it, educating them about it, as maybe a preparation to bringing it into the portfolio structure in the future?
I think advisors should start owning it themselves. So if you don't own it, you shouldn't talk to clients about it. I think that's pretty easy. So own it yourself, start learning and educating yourself, and then start having those conversations. I started off with, hey, what do you think about Bitcoin? And after they laugh and smile, they start having questions. It's pretty simple. Like, just see what they say. It's their money. Let them make the decision. And that's what I say. Like, if you think it's, some magic, my wife jokes it's a car wash token or whatever, like, that's fine. You can think it's magic money, and you don't want to talk about it, that's fine. I'm not going to force it down anyone's throat. I think if they're interested though, and they're willing to listen, and I think especially right now with all the crazy stuff going on and people talking about like, oh, the markets are so disconnected and all this money printing, and they have questions, like, okay, let's talk about something that you can't just inflate and, poof, make more of. And people are interested in that. They want to know like what else is out there and understand it more. And yes, I get that it's not been around for, 120 years or whatever people need as a back test. But like you talked about, if there's a new company that's IPOing, how much history do you have on that company? And also Bitcoin's far more transparent than that company. There's no secrets. It's all out there. It's all code. It's, exactly what's going to happen. Every 10 minutes, there's another block. There's only ever 21 million. The price, you don't know. That's it. But everything is there. It can't be changed or altered. That to me is the most sound. It's easy to do your research. It's sound. It is what it is. There's no changing. It's beautifully simplistic. The white paper is 8 or 9 pages long. It's not a long read. This isn't 500 pages of quant finance. Like, it's written in plain English. It's not too difficult to grasp. And that to me is why it's beautiful.
Prospectus that we accept for.
Yeah, no doubt. You buy
an ETF,
and you get a stack this big. I mean, yeah, exactly. That's a great point.
Yeah, I have was it bi-monthly every other week? Some weeks, some months more. I just buy a little bit every month.
Where we're at?
I buy in Coinbase, but then I switch it off. Although on my ledger now, I can buy through my ledger. I just haven't switched it over. I have no problem. Like, I know. So let's talk about this real quick, and maybe this be kind of to wrap things up. And maybe we can do another Bitcoin convo down the road, because there's going to be more information coming out, more things that you're learning, more things I'm learning. So maybe this is just an ongoing conversation about the evolution of Bitcoin for advisors and the role that it plays. But like you said, no keys, no Bitcoin. So I understand that, buying it through Coinbase, they technically have my keys, but then I get it off relatively. I don't let very much accumulate there before I transfer it over. I don't think Coinbase is going to steal my Bitcoin. Maybe they get hacked, but I'm not keeping it enough there to where I would be like ruined because of it. And I don't have that much. I do $50 every other week into Bitcoin. I do $25 in between that every other week into Ether. Just because.
I won't hold it against you. It's okay.
Because I had good luck with Ether back in 2017. Back in 2017, I bought Bitcoin, Ether, and Litecoin. And I mean, it was dumb luck. I got lucky. I couldn't tell you anything about Ether and Litecoin when I bought it, other than part of my reasoning for that was they were the only two other coins on Coinbase at the time. So I thought, well, people aren't going to buy Bitcoin because it's too expensive. But look at Ether, look at Litecoin. They're a lot cheaper, and they're just going to by default go there. Which I think maybe was some of it. And I've spent more time reading about Ethereum and that chain, and there's a lot of big projects going on there. But to be honest with you, and this is why I don't have conversations with clients a lot now, I know more than enough to just be dangerous. I can have educated conversation. I know how it fits in, but I can't tell you the biggest difference between Ether and Bitcoin. Like, I haven't gone that far down because I don't feel like I need to. I'm with you. I feel like if this is going to be something that I'd end up doing with clients in the future, or clients who are really interested in it, helping them do it, Bitcoin's where I'm going to stay as long as it's top dog. And I'm with you. I also think that if cryptocurrencies continue to be around, which I think they will, Bitcoin will be the one that will be the dominant one. And that's the one we want to be in. So I just do Ether as a little bit of a diversification. That being the case, I think there could be a cause down the road for like a crypto ETF that they hold like the top 5 coins and give you some diversification exposure there. But
Bitwise does that today in a fund. Accredited investors, like, they have that option where you can own the top 10, and they're trying to do the index. I think Grayscale does that as well with their, fund as well that you can buy, but it has a huge premium like we kind of alluded to earlier.
Yeah.
No, you're buying Ethereum and then like, hey, I made money on it. I just put on Instagram the other day, like winning and losing are only loose signals of decision quality by Annie Duke. And I'm like, that's exactly what that is. You got lucky with a decision that isn't necessarily a good decision, but you made money on it. So it's not always the case where there's a lot of money to be made in other coins. I'm not saying there's not, but there's a heck of a lot of money. There's a lot of money to be lost too. Same thing about Tesla stock. Like you get people that are so passionate one way or another. There's a lot of money to be made on Tesla. Mm-hmm. You tell me which direction. And
I wouldn't be doing my measly little $25 into Ether if I didn't understand how much is being built on the back of Ethereum. So the fact that that's being used in a lot of big projects, you've got to have Ether to run it. Now, Ether may not have as much growth potential to it. Like it may not keep up with inflation. It may just be there as, value for those networks, but I don't think Ether is going to go away. So, and I will say that when I started my Ether, I texted. So the funny story. So this is the Advisor podcast. So I do not drink very often at all. For the 4th of July, I bought a 4-pack of the St. Elmo's whiskey and Cokes. They sell them in the store now. It's like, I'll have a drink for the 4th of July. And that 4-pack lasted me like 4 or 5 weeks. So embarrassing. I have one, I can feel it, like a little bit of a buzz. So there's like a Saturday night, I have one, and I've been reading up on some of this stuff. And instead of like buzz purchasing like some Jordans or some clothes, I was like, you know what? I'm going to buy some Ether. So I would buy on Coinbase, buy some Ether. And like from that point on is when it went on that nice little run. And I texted Tyrone the next day. He's like, have you seen what Ether's been doing? And I'm like, oh, so my little buzzed purchase of Ether is what set it on fire the last month. It's kind of funny. The timing, pure luck.
Yeah. So, I mean, Vitalik, I can't even say his last name, basically the creator of Ethereum has even came out and said that the project itself is 60% done. It doesn't know what it necessarily is. It's not money, but it is money. So there's just a lot of confusion in that space. I think it'll be something, but it's not money. It's not a store of value. It's not anything that, again, I would go back to and say advisors need to worry about. That's cool. If you have someone that's really techy and they want to get into it, great. But I think you can do a lot of good for your clients by just telling them if they're interested in the space, buy Bitcoin. And I think you can be very comfortable long-term with that recommendation. That's my thought. Keep yourself out of trouble and your clients by just focusing on Bitcoin.
So the ongoing monitoring of if your clients are purchasing Bitcoin, how do you plan on bringing that into your reviews with them? Just, have you bought any more? Do you still have this and just kind of spreadsheeting it for them for now? Or how's your plan to kind of, for those clients that do end up getting it, how do you plan to help them with that?
Yeah, so I think first and foremost, it's having the conversation of how do they want to own it? Do they want to own it themselves? Which I would advocate for. That's how I do it. So I would encourage you, we can talk offline about not buying it on Coinbase. So there's better places to buy it, but we don't need to get into that right here because of just costs and other stuff. But anyways, if they wanted to own it themselves, I think it would be great to walk them through, these are the key things, here's some good resources and content, and encourage them to do that and show them how to set things up. And again, I go back to Casa with their multi-sig, that can protect them in case they lose their hardware wallet or forget their seed phrases, or they do something and they blow themselves up. That helps protect them. So there are ways to educate them to do that. If not, I'm actively looking at and exploring blockchain, and that's probably going to be where, for me and Vincere, if we have clients that want to own it and they want us to take control of that, it's, again, custody at Gemini, we would have access to that so we can kind of monitor it there. But those are kind of the two places. The other being if they wanted to own it in a IRA, my favorite self-directed IRA is Alto. So it's they do a lot of good stuff. Their pricing's very fair. It's just a great company. I've been super impressed with what they're doing. They're building out more infrastructure for RIAs, so stay tuned. I've had some conversations with them, and I think they're doing some awesome work in the space. But you can buy, again, through Coinbase, which I don't love, but you can own Bitcoin in your IRA through Alto, which is how I own it today in that spot. I own it in a couple different places just because I've kind of experimented with how you can own it and just see. And that to me is how I've educated myself, is just by doing it, putting my money where my mouth is, seeing how it works. And then I can explain to a client why maybe they don't want to do it there, what the differences are of, GBTC and, your TD Ameritrade account or Schwab account. You can go buy that. There's a premium to it, but it's really easy to go click and buy.
Right. And I did the same thing. Back in 2017, when Ripple was having its craze, I bought some Ripple on Kraken. And the whole purpose I did that was, it's like $5 worth. I just wanted to learn, how do you do that? Because I had to buy my Bitcoin on Coinbase. I guess I could have bought it on Kraken, but I bought it on Coinbase, sent it to my Kraken account, then bought there was multi steps. And like by the end I got done, I paid like 40% in fees to get it done. But I wanted to learn how to do, I didn't want to do it with a substantial amount of money. I just wanted to go through the action that if somebody really, really wanted to do it, I could at least tell them, here's the steps. I'm not advising you to do this, but if you're going to do it, don't mess it up. And here's the steps you need to go to. You need to take it here, go there, convert it, and then get it off of there and put it on your wallet, just to understand. I think it's good to go through the actions, even if you don't want to have a huge allocation to it, just to understand, again, to be able to be a resource and answer your clients' questions. I don't think, and maybe I could be wrong, I haven't read that we put ourselves in jeopardy of providing resources and action steps for clients to go purchase. If they're going to go do it, I feel like it's our job to make sure they do it properly and understand the risks and rewards. You have that conversation and then help them do it the right way. I don't think you're in any risk of getting in trouble of doing that, because that was their decision and you were there to make sure they did it right. Just like you would help them buy gold properly if that's going to be something they're going to do. That doesn't put you, I don't think, at any risk, which is what a lot of advisors are worried about too.
Well, to me, it's have the conversation, and you can be as optimistic as myself around what you think it will do. But at the end of the conversation, I always say, the only money should be go here. It could go to zero, 100% go to zero. As long as you're okay with that, I think it makes sense. But again, it's your money, but this could go to zero. Make sure you understand this could go to zero. I don't believe that for an instant. I don't, but I think that's how you need to set expectations with clients, is that it could go to zero. So you're not putting a ton. Again, we've made the argument 1 to 5%. I think that's where kind of the magic happens for Bitcoin right now. If you have someone that's really, really, made a lot of money in Bitcoin, let's say a client that's made their money in Bitcoin, that's a whole nother conversation, trying to get them to diversify in the other way of like, right. Hey, don't have so much tied up in that. Because there are people out there that are multi-millionaires because of buying Bitcoin early. And those people are there, and they will probably never trust the traditional financial system and probably aren't going to seek an advisor anyways. But there are people out there that have, considerable amounts of money in it. I think one other area, and this is kind of, bouncing around, but I think estate planning. I tweeted about this a while back that I think
Casa has a solution for that, right? I was
going
to mention that they're kind
so
of
cool.
A good one for estate planning. And Jamie Hopkins has talked about it, and maybe one other person as well. And that's something that we need to think of as advisors, even if it's not, okay, go buy it, here's how you buy it. Oh, you have Bitcoin? Well, is it accounted for in your estate planning properly? Because it's a little bit different than the current assets we're used to working with. So sorry to interrupt, but I knew the Casa had stuff for that.
They do. And so when you get on their higher tiers, and I'm not a Casa salesperson, I have no interest in the company at all. It's just, they have concierge service as you move up to where they help with all that. But the big thing, and this was something that clicked with me, is if you have multiple keys and you inherit it, let's say you have, Johnny over here that you don't trust very much, you can still give him his key. And then you have the trustee or someone that is making sure that he doesn't spend his money doing something stupid to sign off on all the purchases before he can extract that Bitcoin. That's going to be something that we do in the future, is have multiple signatures. And that way it's easy. I mean, it's not money in a bank account where, you could somehow finagle your way through and get that money out, where this is literally without the key, you can't sign. It's almost the same idea of you think about the movies where they have the nuclear launch and they have the keys, they turn at the same time, and that's what sends it up. Same idea with Bitcoin. It's multiple signatures, and it's a great way to safely, securely hold that. And that's how, for all the Bitcoin that I hold personally, that's how I have it set up. I don't have a ton. I don't have, hundreds and hundreds of thousands of dollars of Bitcoin. But if I did, I would make sure I was on the highest tier within Casa to make sure that, God forbid anything happens to me, people can access it and get to it. Because I think that's always the trouble too, is what happens if the person that knows it all is, has a spouse or someone else in their life that doesn't know how to do any of it. Where does the crypto go? Where's the Bitcoin go?
Poof. Disappears. Yeah. It is magic money. It's gone.
Yeah.
All right, we have one question from your tweet yesterday about our conversation from my friend Kevin, aka Fervent Finance on Twitter, and his question was around being fiduciaries as advisors. How do you maintain being a fiduciary as far as the research you do? Should you be capping allocations? Kind of what's your stance of a fiduciary when it comes to crypto? Or Bitcoin,
So again,
not even crypto, let's go Bitcoin.
yeah, I was gonna say, like, first I would say, like, there's crypto and there's Bitcoin. So just wipe away everything else. Don't worry
Yeah,
about
Bitcoin.
it. Just focus on Bitcoin. So that, lessens the load of what you need to understand. Everything with Bitcoin it's not changing. So if you do your research and read things, it's not like it's evolving over time and going to be something completely different in 2 or 3 years. It's the same thing it was back in 2009 when it came out. So if you learn and understand it, you know it. I think being a fiduciary is putting their interest ahead of yours. And so again, if you look at a small allocation and what it could possibly do to the wealth of that family, and you look at, the Bitcoin numbers that are thrown out there, anyone that's a quantity nerd, I would say they should go read Plan B's Stock to Flow. And we didn't get into this. We don't have enough time to go through it, but it is amazing to start to see how it fits along and how, trying to think of the right word. I'm not the nerdy quant person. I like reading that stuff, but that's not me by nature. But the R squared is so tightly connected with, you look at gold and silver and all these other commodities that are hard assets that you can't just print more of. Mm-hmm. You look at Bitcoin and it will give you a projection of where it will go into the future. And if that's anywhere close to being right, a small allocation for someone is absolutely changing the wealth of that family. And I don't care how much money they have. I don't care how much money. You could put today, Bitcoin's around, between, it's probably like $10,500, let's say. You could put $25,000 into Bitcoin today, and that could change the trajectory of that family's wealth. Period. Like, to me, being a fiduciary is not talking about that. Like, you'd be more of a fiduciary lapse. And again, I know some people probably think he's an interesting character, may not care for him much, but Mark Yusko's made the comment that in 10 years, not talking about Bitcoin and crypto, you're going to be breaching your fiduciary duty. Now, vested interest with some of the stuff they're doing, but I completely agree with that comment.
I knew that's what I figured that was gonna be your first. I thought you were gonna say, if you don't talk about it, you're gonna be breaching your fiduciary, just to be bringing it up. So I figured that's where you go. Any closing thoughts? I think this is a great first convo. Like I said, we'll do this every so often, just as things change and more information comes out there, more questions come out. I look at this is a learning experience for me as well, because I've done my research in the past, kind of moved away from it for a while just because I had other focuses I was working on. But then, like, seeing it again and getting back into buying on a regular basis, I don't really have any clients asking about it. So that's not prompting me, but I think this is just a good conversation to keep on having, letting our advisor friends out there tag along and learn as well, or decide they don't want to know it as well. And if you're a non-advisor that has happened to stumble across this podcast, none of this was an investment recommendation. Do not go out and buy Bitcoin on your own without talking to your financial advisor. All those things we're supposed to say. This is really designed to be two friends, both interested in Bitcoin, one a little bit more deeper into it currently than the other, just talking about the future of it and how it fits into financial planning and advisory. And I do think that advisors need to know about it, need to be able to talk about it. And I do think that in the not so distant future, it's going to find its way into portfolios on a regular basis. So I see the light you're seeing. I'm maybe, if we're running a 400, maybe I'm 150 meters behind you. Just being a little bit more cautious because I'm older, like I'm getting old. But I thought it was a fun conversation. So I appreciate you taking time on a Friday afternoon to talk this with me. We'll do it again. I'll link to your Twitter. I'll link to your blog post. I'll go back and look at the books that we mentioned, the white papers. There'll be a long list of show notes in here as well. I'll also link to the new website also in case there's any advisors out there that, hey, this guy gets it. I wouldn't mind working alongside somebody like that in the future. They can find you since that's part of your guys' growth plan as a firm. And we'll have you guys on to talk about that in the future as well. So any closing thoughts before we hit wrap?
Outside of putting money in the business, the only place I'd put money today is in Bitcoin, personally. So, I mean, that's all I got to say.
All right. He's practicing what he's preaching. All right. Hey, Isaiah, I appreciate you taking the time for real. Hopefully next time we record, we can do it in person. We'll sit down at the table, get the mics out, hit a camera on so we can put it on YouTube like usual, but do it in person instead of over Zoom.
Yeah, absolutely. I appreciate it. Thanks for talking about a topic that I think more people are going to want to know about. And so, yeah, do your own research. And I think you'll come to the same conclusions if you spend enough time on it. Like, just truly look into it. It's my ask.
All right. eventually I'm going to get you to make a prediction of where you think Bitcoin will be in 10 years, but we'll save that for a future episode. We'll tease people. All right, man. I appreciate you taking the time. Everybody, thanks for listening. Thanks for watching. If you're watching this on YouTube or over on Instagram TV, subscribe to the Advisor of Tomorrow newsletter to stay up to date with everything that's going on. I mentioned I shared Bitwise piece before, so everything in there is futuristic when it comes to advisors, so there'll be some stuff along these lines. But thanks for listening, and we'll see you all in the next episode.